Hello everybody, welcome to a Capital Hungry New York market update. It is currently 3:30 p.m. Eastern, Tuesday, April 13th, coming up into New York market close. We are just going to be updating on some fundamental events and that impacted the technical markets, obviously, as we like to analyze the technicals, and understanding what caused some of this short-term fear, uncertainty, and doubt, and how we could potentially use this information to our advantage, while also looking at what economic events we have and of course what fundamental points are at play. So for those of you who also have been following the previous webinar and the Capital Hungry Analysis channel or the Capital Hungry Free News Twitter, where all of those resources are laid out on the layout itself and within the description. But at 7 a.m. Eastern, we had a high impact headline, which was the Johnson & Johnson vaccine use being paused in the US due to causing blood clots, right? So you can see that headline came around 7 a.m. That headline that came around 7 a.m. Eastern caused a shift in the short-term market sentiment, which also caused a downside move on the US stock market, caused an upside aggressive push on gold as a safe haven precious metal. It caused some weakness and uncertainty with the US economy and US dollar, and it also obviously brought some short-term strength with the Japanese yen, which gave us harder times for the GJ bulls, right? So before we jump into that, just as per the economic events that we do have taking place at Asian session, if you guys are trading Asian or if you're also going to be trading overnight, we don't have too much economic data as for Euro and London session, but through Asian session at 10 p.m. Eastern, we have the New Zealand interest rate decision. In my opinion, the New Zealand interest rate decision should be fairly optimistic, following suit with what the Reserve Bank of Australia said in the previous week, meaning that they will still be very optimistic towards economic recovery. They're not going to be raising interest rates anytime soon. There's still room for financial stimulus and support for the economies, and they do see higher signs of recovery as long as we don't get any potential downside risks from COVID resurgence, from COVID cases spiking or any lockdown or anything alongside that. But I sent that headline in the free chat. Obviously, the private chat had it first, but at 7 a.m. Eastern, you can see the U.S. called for a pause on the Johnson & Johnson vaccine. So when you're looking at gold, for example, on the hourly candle, that was as we came down to this lower time frame support, and we also failed to break these previous low areas. Huh? You guys are talking about that guy who's trying to buy gold? Listen, this upside move was due to a reactive headline, fear, uncertainty, and doubt that increased the demand of gold as a precious metal safe haven, right? The guy that you're talking about from last night was trying to buy gold here. He was trying to buy gold here. He was trying to buy gold here. He was trying to buy gold here. And then he tried to buy gold here again. All right? Any of you guys who are supporting that type of trading behavior in the chat, I'm sorry to say, you guys are also probably long-term losers. You know what I mean? You guys are supporting, you guys are talking about something or supporting someone that's been break even for 5 months and was forcing buys. You know what I mean? And you're not focusing on what caused the upside move on gold and how we can potentially take advantage of this and actually trying to share value with each other. That's the difference between guys like me who do the stream and guys who watch the stream. All right? Yeah. So let's focus on actually providing some content and value so you guys don't all end up like Jacob, because right now, all of your accounts, like for example, the guy AR talking, your account's the same as Jacob's. Mason's account's the same as Jacob's. Like, you know what I mean? Every person's account right now, if you wanted to send me your profit, loss, and wins from the last week, the last 2 weeks or month, you know you can't send me that. Right? So anyways, what we're going to focus on here is, that's the reality. What we're going to focus on here is that this headline, the US calls for a pause on the Johnson & Johnson vaccine after blood clotting cases. This brought fear, uncertainty, and doubt regarding the recovery that can come from the pandemic. Remember, the solution to the pandemic and the pandemic markets has been the vaccines, and that's what they've been trying to push, that narrative as well. You know what I mean? So that is what caused, when you saw this initial upside move on gold, was from this fear, uncertainty, and doubt. I just want you guys to understand the real world fundamental catalyst that caused the upside on gold and that increase in demand on gold as a safe haven. And also on GJ, you saw this impulsive downside move. Understand? And then on the US stock market, even though it's got corrected fairly quick, and we're going to talk about that, you also saw this aggressive pullback to this previous demand area. All right. Now, what I want everybody to understand is something very, very critical for us as retail traders when we are dissecting the impact. Listen, if you guys want, I can just go do this for the private channel how I normally do. If you guys want to just fuck about in the chat and just joke around, we can just stop this right now. I can end it, delete it, and then just go do this and just go run a Zoom channel and just go run a Zoom webinar. How about, that's what I fucking thought, you fucking bums. Yeah, that's what I thought. Yeah, keep your fucking mouth shut. That's what I thought. Yeah. That's what I thought. Exactly. All right? I'm trying to talk about how us as retail traders can dissect this fundamental impact and how we can use this information to take some trades. And you guys jerking each other off in a circle about fucking nothing. What do you guys even talk about? Nothing. I'm asking questions so I can confirm what information you guys are understanding. All right? So let's restart. This fundamental headline that brought fear, uncertainty, and doubt. Yes, it caused this downside move, an impulsive sell on the US stock market, because it causes buyers to close off positions and sellers to jump in. Yes, it caused this aggressive upside move on gold from 1725 all the way back to this previous price sensitivity zone. Do you understand? It also caused this downside move on GBPJPY or other yen pairs, because obviously Japanese yen is a safe haven currency. So when you have any fear, uncertainty, or doubt from a real world fundamental catalyst, you have the Japanese yen gain strength. And as we fail to break above 150.8 in this price sensitivity zone to the left and this previous rejection point, you can see when we had that headline, the same time gold pushed up, the same time US 30 pushed down, GJ pushed all the way down to these previous lows. Now, this is the interesting part, okay? This is what we have to dissect and digest as retail traders. Even with this short-term fear, uncertainty, and doubt, did gold break any previous highs? Did GJ break any previous lows? Or did US 30 break any previous lows or market structure? That's the questions you want to ask yourself. As retail traders, we can observe the fundamental impact of an economic data report or catalyst from observing the technical impact in real time and seeing where candles are closing and if we're changing structure. What's very interesting to me is even though we had this fear, uncertainty, and doubt, which clearly caused this sell-off move, This sell-off on GJ went exactly to these previous lows and rejected on the dot and still closed above it. Okay? When you're looking at gold, even though you had this aggressive bounce from this lower time frame, this intraday support area here, this aggressive bounce, even with that fear, uncertainty, and doubt, it still didn't break above these previous high points. All right? And when you're looking at US 30, yes, you had this aggressive pullback, but look, the pullback came exactly to these previous highs, and look at the stock market. The stock market acted like, the stock market technically, when we're looking at the movement, is acting like this never even happened. All it did was cause that exhaustion and pullback where if you guys remember on the London session webinar, we wanted US 30 to pull back to 33,500 anyways. It was about 100 points off, but you get the idea. It came to pull back to that previous high, and we almost corrected that downside drop. So what I want you all to understand is, yes, this headline brought some short-term fear, uncertainty, and doubt. Yes, it caused this pullback on US 30, but the US 30 pullback came from a high, and it still didn't break below previous highs or bullish market structure, and buyers jumped right back in to buy up that dip and correct that downside move, showing me that the impact of this headline and that potential fear, uncertainty, and doubt is not long-standing. The impact, the pricing in of it, and the digestion of it by investors was just as fast as it came in. Right? Now gold. Let's go back to GJ first, actually. GJ, same idea. I'm not saying start jumping in GJ buys right away. I'm saying that this headline was overreacted in the mainstream media, and it didn't lead to a shift in the higher time frame structure or even the intraday structure. If that headline really brought long-term fear, uncertainty, and doubt, you would have expected after GJ failing to break these lows, and you also have this fear, uncertainty, and doubt from negative vaccine talks, because let's be honest, this isn't the first company that's having blood clot side effects. I think this might be the third. That's one of the reasons why this headline did have that initial impact. It's not like it's the first company showing side effects. It's like the second or third now. But what's interesting is where we still rejected technically. You would think with such fear, uncertainty, and doubt, sellers would flood the market and you'd start breaking below these previous lows, giving us easier sell structure to continue to play. But we didn't. We're coming right down to these previous intraday lows and actually rejecting and starting to create a support again. Right? This short-term fear, uncertainty, and doubt from that headline, we're going to need a lot more fear to break the higher time frame structure, is what I'm telling you guys. We're going to need a lot more fear to break above 1755 in these previous high area to really see safe higher time frame buys on gold above this consolidation zone. You're going to really need to see an inflow and a flood of more fear-filled vaccine headlines to break below this low in 33,500. You're going to really need to see a lot more fear, uncertainty, and doubt regarding Brexit and regarding vaccines to break below these lows and go revisit 148.8. And even to break below there, it looks like it would be a struggle. Any type of fear, uncertainty, and doubt, what I'm trying to communicate to all of you, any type of short-term fear, uncertainty, and doubt, to me, all it's done is manipulate the markets to push it into a better demanded price to continue back up. Do you understand what I'm saying? Any short-term fear, uncertainty, and doubt has only created pullbacks on the stock market to a better demanded price, and then that dip gets bought right back up. Same thing on GJ, same thing on gold. With even though we've had these aggressive pullbacks when you're looking at gold, ever since we've had the flood of vaccine headlines, you just can't deny that, yes, you've had extremely aggressive bounces. Yes, you've had extremely long consolidation phases and indecision periods as well. But overall, with the macro optimism, you're still having sellers continuously print new lows and failing to break previous highs. Because on a macro perspective, fundamentally, the flood of support from the central bank from a financial perspective is a lot stronger than any of the short-term fear headlines that haven't been long-standing enough to shake the sentiment. We would need a full recall on vaccines, another global, like, think about it. We would need the same type of conditions that caused the initial crash. That same type of pandemic fear, uncertainty, doubt, the whole globe locked down, people panicking, having no idea what's going on. No talks of vaccines at that time. You have to understand, the market goes before the real world. They already priced in all that shit as it happened, March 2020 and prior. That's why you had this monstrous impulsive move on gold to these all-time highs. That's why you had GJ crash to historical lows and then get bought right back up. That's why you had the US markets and global stock markets crash and get bought right back up. From that initial fundamental catalyst that caused those crashes, that caused this upside move on gold, we have not had anything match that sense from a fundamental perspective. We've had some uncertainty and short-term fear. We've had some countries go into lockdown, others open back up, but we've primarily had central bank support, economies start to open back up around the world, and some just start staying in lockdown or go back to lockdown, and a flood of vaccine talks. So when we're looking at gold here, from a higher time frame perspective, this was the last previous low. You can see when you want to drag that straight across, that's almost where we still have been rejecting. And I don't want to call all this on gold yet safe higher time frame buys. This is just gold having its consolidation or indecision period. Do you understand what I'm saying? Gold could be bouncing around in this indecision period just like it did here multiple times from these lows. But if we still have markets optimistic and we don't break above that price sensitivity point, just be very cautious about trying to take safe gold buys higher time frame. Safe gold buys higher time frame are going to come back from consistent fear, uncertainty, and doubt in the markets regarding headlines day after day, week after week, a recall on vaccines, distribution issues, more side effects. More economies becoming more countries going back into lockdown. Plus technical break above these previous lows and around 1770. Then you have a shit ton of upside room. But when you're looking at gold, you don't want to get caught in something like this when we zoom in a bit more. You have this impulsive move that starts to show you exhaustion, but you really just enter a consolidation phase. See here, you pushed up, you double bottom, but if you don't break above those previous highs where you're creating that consolidation, this is just the consolidation zone in liquidity generation in that indecision period. Similar to what we're seeing here. Yes, we're having some aggressive bounces, but if we still have markets overall optimistic, if you see stock markets continuing bullish again, if gold doesn't break these technical high price points, don't be surprised when you see in one day a meltdown right back to these previous lows. Don't be surprised or shocked or wonder why. Same thing when you're zooming out now and you're looking at GBPJPY and you're looking at the simple market structure. Any of these pullbacks in the short term are simply as that. It's just pullbacks. You only have the market moving up in two phases as it's been respecting this higher time frame bullish structure. You have an impulsive move, a pullback that's usually a 50% correction, or a pullback to a better demanded price, and then a continuation. Or an impulsive move, a consolidation phase, and then a breakout to the highs. That's all that GJ has done ever since the initial pandemic fear got priced in, and then the central bank started flooding their respective economies and markets to provide that support, right? So you have to ask yourself the same questions when you're identifying and looking at the fundamental catalysts. GJ's having this pullback, right? But where is this pullback coming from? Well, it's coming from a high that was printed by buyers. So this pullback right here, to me, I'm going to identify it as profit taking. To even see a break of the intraday bullish market structure, we would need to come below 148. That's the last previous lows on GJ. Even if GJ wants to do a deeper pullback all the way down to 148, you still have all this room for potential upside, and bullish market structure still very much intact. You're just having that short-term fear, uncertainty, and doubt cause buyers to take profit, sellers to jump in hand to relieve them out of the market and push price to a better demand area. And then as soon as you break out of that corrective bearish market structure, which you can identify on the lower time frames with like a bearish trend line, as soon as you break out of that structure, whether that pullback phase lasts a day, whether that pullback phase lasts a week, as long as you don't break the overall bullish structure and markets fundamentally are still optimistic when you're looking at like the stock markets and the overall flood of vaccine headlines, all you do is have that demand and dip get bought up and buyers run right back up to previous highs. All right? Exactly, Tiago. That vaccine news, even though it was negative, even though it brought that short-term fear, uncertainty, and doubt and caused this move that we can observe technically, what we have to dissect and digest as traders is, wait a second, it still didn't break these previous lows, and it still closed above those candle bodies. You would assume or predict, if it was really that high impacting as per negative volatility and really that much fear, we would have melted below these previous lows and continued right back down, but we didn't yet. So now let's get to the analysis points. Now, when we're looking at GJ for the new daily candle, the point of this New York update is for the new daily candle setups, okay? You can clearly see this consolidation in order block. 149.8 is a very strong technical decision point, as well as 150.8. If we, on the new daily candle over like the next hour and a half, if we push down first to like these candle body low areas and we fail to break, and then come back above 149.8. Please listen to the sequence of events. If we don't have any more negative headlines regarding the vaccines, if global stock markets still buy up that dip and continue bullish, if GJ, the new daily candle, does not break these lows, high risk, high reward buys at 149.8 and starting to scale up here. The safest buys would be waiting for the failure to break those lows, coming back above this order block and consolidation zone, and then breaking above 150.8. I know it may seem like, oh man, I missed the bottom buy entries, I missed the buys. No, remember, when we break out of this consolidation zone and break out of this bearish market structure by validating a technical break above these highs, and we still have optimistic markets, remember, these buys, you're starting to scale up to revisit previous high targets. Just like any other pullback phase, and when you finally break out of that pullback phase, like for example here, let's zoom in here when we had this pullback at the end of February and in the start of March coming in, right? You had buyers print a new high. At this new high, you had profit taking. From this high, and on the intraday periods, you had this short-term bearish market structure respected. until you came to 148.8. The same type of idea. Failing to break these previous lows, this is your high risk, high reward buy area. If you don't want to take your buys there, that's fine. That's your high risk buy area. You're just starting to identify seller's exhaustion there, just like you could potentially start taking buys here, but you don't have validation to extend your buys until you break out of that bearish market structure in the previous lower high rejection points. And also look, even if you didn't take the high risk, high reward buys, even if you didn't take the break of structure buys, if you still patiently wait for your confirms, you're still taking the buys, which is a 300 pip run all the way back up to these previous highs. As markets are still optimistic, that demand area gets bought up, buyers re-enter the market and go straight up to and continue the trend. Right? So that's what I'm saying here on GJ. When we're looking at that short-term fear, uncertainty, and doubt, yes, it had this downside move, but it didn't break market structure yet. So on the new daily candle, if the new daily candle pushes down to these previous lows and doesn't break and flips bullish, this area is high risk, high reward buys. You can't extend your buys or hold your buys unless we break above these rejection points in this price sensitivity zone. If we break above there, that's your medium risk, safer buys. The safest buys is above 151.2 and starting to scale up to these previous highs. I would only be looking for GJ sells now at this current price point if the daily candle pushes up first, we don't break these previous highs, and we break below 149.500. Just because even with the negative volatility we had with short-term Brexit headlines, we created this low. We had this pullback, failed to break this low again. We had this pullback and those negative vaccine headlines failed to break this low again. I know now from a technical standpoint that if we do have more fear, uncertainty, and doubt and come below 149.500, that is an easy sell to revisit this previous low and continue playing the corrective bearish market structure. And you guys also might be wondering, hey Jeev, why is your trend line like this? How come you haven't moved your trend line like this or like this? My trend line is just a visual representation of market structure. I'm not going to move this trend line until a new low has been created and market structure is extended. If from this point we break into a new lower low, then I'm going to adjust my visual trend line and say this is more refined bearish market structure. The reason why I still haven't adjusted this trend line from this point here is because we still haven't broken into previous lows yet. We still haven't broken these previous lows or showed new lower lows being created yet. All right? So when we're mapping out trade ideas, if the new daily candle fails to break these lows, high risk, high reward. You have less confirms, but also if we don't break these lows, you're also in at that potential bottom and you have a higher reward potential. But that's what this is all about. It's high risk, but it's also higher reward. Safer buys above 150.8, safest buys above 151.2. I'd only be looking for sells below 149.5, and that would be with more fear, uncertainty, and doubt to target these lows. All right? The CPI data did not have too much of an impact on the US dollar. It was really a short-term impact. What was primarily impacting the markets today and had the biggest impact was the Johnson & Johnson vaccine headlines about the US pausing use of Johnson & Johnson vaccine. and how it's causing potential blood clots. And this is like the third vaccine company now where their vaccine is causing blood clots as a side effect. We were just dissecting the impact it had and if it shifted market structure. So those are the GJ trade ideas. Now on gold. I can't safely tell anybody to start taking gold buys until we break above 1760. Yes, we had this technical double bottom which shows us seller's exhaustion. Yes, we have this consolidation in liquidity zone that we are breaking back above, right? But we still had sellers create these lows. We still haven't broken above these previous intraday highs, which lines up with the previous impulsive low created by sellers. And we still have markets fundamentally optimistic from a macro perspective. I would only be looking for safer continuation on gold buys above 1760. Once you break above 1760, there is so much room for upside, even 400 pips up to 1800s. You're going to be ripping to the 1800s if we have continued fear, uncertainty, and doubt. Stock markets are going bearish. Japanese yen is picking up strength as a safe haven currency, and GJ's bearish. Gold breaks above 1760. Technically, it's going to run a train to 1800. But I don't want anybody getting caught trying to buy buys when we still have sellers printing lows. We're having these impulsive bounces, but these bounces are not breaking previous highs or that market structure. And you can see we have all this indecision and then you just melt down to a new low. So same type of idea here. We had sellers print these new lows. Yes, you're getting signs of exhaustion and aggressive bounces, but until we break above these previous highs, I do not want anybody to get trapped. And we have the markets optimistic and we continue right back down. If we have the confirms fundamentally of stock markets more bearish across various regions, the Japanese yen picking up strength standalone as a safe haven currency, even more headlines regarding vaccine negativity or COVID negativity, and gold breaks above 1760, it's easy buys up to 1800s. But until then, I do not want to touch gold, and I'm actually going to be looking for sells if we come back below 1721. I'm looking for sells to revisit these previous lows. Just like when you had this order block and consolidation, and even though here, you see you had this order block and consolidation, right? See how you had this impulsive break below, but a very aggressive pullback that almost went back to the previous highs. See how when you didn't break those previous highs, as soon as you come back below the consolidation, you melt to that low and actually have a retest to that consolidation low and a continuation to the downside. So if we have markets optimistic and the new daily candle makes the upper wick and doesn't break these highs and we come back below 1720, expect to revisit these lows. I'm looking for gold sells below 1720 with markets continuously holding their macro optimism, which you would identify as the stock markets buying up that dip that was caused from the vaccine headlines today and continuing bullish. Or even if the stock markets start to consolidate but at the highs. We have those confirms and gold breaks below 1720, it's easy sells back to the lows. We have continued fear, uncertainty, and doubt and a break above 1760, it's easy buys to the highs. Just don't touch it in this range here. Just don't touch it when gold enters these indecision stages. Let it have its technical breakout with the fundamental confirms and you can ride a very nice impulsive wave. And you don't have to catch this whole 400 pips to 1800. You don't have to catch the full 400 pips back down to the 1680s, the 500 pips down. If you catch a good 50 pips, 100 pips, 200 pips of that piece, that is absolutely incredible. All right? So what we have to dissect, and I want to remind everybody, is yes, we had that short-term fear, uncertainty, and doubt. Yes, it caused that short-term upside move on gold, that downside move on the stock market, that downside move on GBPJPY. But has it broken market structure yet, or previous lows or previous highs? Previous high example on on gold, and the previous low example when we're talking about like GJ, and when we're talking about US30, we still haven't broken these previous lows. US30, we still haven't broken these previous highs, or 33,500. So those are the trade ideas shared for safe sells and safe buys on GJ, and what you need fundamentally and technically, as well as gold. Now this US30, because this is going to be an easy one. This is a nice price area of interest at the previous highs, even if we come down to 33,500. You can see we pretty much closed at this price point in the new daily candle once it opens up. If the new daily candle pushes down and creates a double bottom and fails to break 33,500, you're going to get that double bottom bought up and buys right back to 33,800. Safer buys also above 33,800 on US30 with continued market optimism. I'd only be looking for higher time frame sells if we come below 33,400 with more fear, uncertainty, and doubt. If we have more flood of negative vaccine headlines, if more states in the US go into a lockdown, if we fail to break these highs and break below 33,400, then you can start taking sells. But I personally am way too scared to sell the US stock market. I would rather not fight the Feds. I would rather wait for the pullbacks, supports created at better demand areas, and continue playing the buys. There is too much financial support from the central banks. There has been too much optimism regarding vaccines overall. There's already been 100 million people vaccinated, even though all these side effects and negativity is coming out now. You know what I mean? And we haven't had any fear, uncertainty, or doubt that has been equal impacting levels compared to the initial pandemic fear March 2020. That was just straight pandemonium, uncertainty. Everybody in the world was going crazy. We have not had anything equal to that to cause mass uncertainty or doubt, or to cause investors to start exiting positions on the stock market and stopping this greed train. Do you understand? So if we get a pullback, the new daily candle to these lows, even a bit deeper to 33,500, and we create a support, high risk, high reward buys. Safer buys above the previous highs. I'd only be looking for sells with those confirms. Alright? Now, I don't want to give you guys too much here, so I'm going to stop it at that. GBPUSD, EURUSD, I'm going to save it for the private chat. But, just want to say, GBPUSD analysis is very similar to our GJ analysis when you're looking at the higher time frame structure, when you're looking at previous lows and where we're rejecting, showing some signs of seller's exhaustion, when you're looking at that negative move from the vaccine headlines, how it still didn't break structure, and when you're looking at if the US dollar continues to be flat and market optimism holds stronger, if we break above here, I'd only be looking for sells on GBPUSD. There. Can I please help you take $50 to $400? Yes, I can. So what you're gonna do first is go on your computer and start typing up what I like to call your resume, your resume, your job applications. Then you're going to take that $50 and you're going to spend it on printing out 5,000 copies of your resume. Then you're going to go to every single McDonald's, Wendy's, fast food spot, Walmart, Target, convenience store, gas station, and you're going to apply to these jobs. Eventually, after investing that $50 and applying to over 1,000 jobs in your area, somebody is going to hire you. After 1 month of working part-time or full-time, you will earn $400. And now you just took your $50 to $400. All right? But anyways, unless we have fear, uncertainty, or doubt and the US dollar turns bullish and global stock markets turn bearish and GU breaks below 365, I'm not selling it. I'm starting to look for high risk, high reward buys and the safer buys above 1.39. And EURUSD, USDCAD, very similar concepts. You get the idea here. Even though EURUSD has done this aggressive pullback, you can see the support and price liquidity zones that are starting to be created. You can see potential retest points we have at 1.2. I'm going to keep it fairly short and brief there, all right? So, economic events. During Asian session, we do have the New Zealand interest rates at 10 p.m. Eastern. It's right there on your screen. Some of the key fundamental points are Brexit talks are back on the table, so you do want to be watching the Capital Hungry News Twitter if you're not in the private chat. And any of the private chat members, you do want to be watching your headlines for any Brexit talks regarding trade rules for Northern Ireland. All right? We have had some negative vaccine headlines, specifically with the use of Johnson & Johnson vaccine being paused in the US due to causing blood clots. But as retail traders, when we looked at the technical charts, we observed the impact those headlines had, but our understanding it hasn't broken structure yet, or previous highs on gold or previous lows on GJ, vice versa, what I'm showing you guys. We're going to need more negative vaccine headlines, more uncertainty regarding COVID, more countries going back on lockdown to have a shift in the higher time frame macro optimism and bullish trends on GJ, higher time frame bullish structure on GJ, GU, stock markets, EURUSD, and continue the sells on UCAD and obviously gold, right, to shift that. We've already had, and if you understand the market timing, you'll also understand that that aggressive pullback we had on GJ for the last week to start off April right now, it's also the start of Q2. We're having that order flow set up for the institutions setting up their potential positions long term for the next quarterly period. We had Q1 end and Q2 start with April, right? And we are having short-term tensions arising regarding Iran's nuclear development, but nothing too crazy. Also, as traders, don't forget to stay smart. Stay as mostly neutral as possible. Follow your trading plan, your risk management plan. Focus on your long-term visions. Keep emotions out and stay as emotionally neutral as possible. All right? Make sure you guys take the time to increase your knowledge, experience, chart hours, and check out all the webinars on the Capital Hungry YouTube page for free. You have educational webinars, fundamental webinars, technical webinars, even real world webinars about how masculinity is being destroyed, about how society is extremely soft nowadays and mentally weak, about the 1% versus the 99%, how and using real world economics as examples, like from the central bank corruption. Don't forget to follow the Capital Hungry News Twitter. Post tons of headlines throughout the day and night. Don't forget the Capital Hungry free Telegram analysis channel. Capital Hungry Big Clout page as well. It might be the next big social media page, so might as well check it out. You don't have to invest, but just to follow and sign up there, you know. Right? Make sure you educate yourself, follow all these free resources at your fingertips. No clickbait, no false expectations, no selling some fake dream. I just uploaded a Euro USD higher time frame swing trade idea webinar. Just did a rant on masculinity. Just did a live stream last night, and doing this today as well. You know what I mean? Just trying to give back to the community, grow Capital Hungry's exposure and social media presence without being involved on the toxic side of social media. So make sure you follow the Capital Hungry News Twitter. Oh, look at here too. I saw this headline, but Fauci, the doctor, look at how he tried to backtrack the very rare case with the J&J vaccine. So he's like, don't worry, there's no red flags with Pfizer or Moderna, and the issues with J&J are very rare. So we had that negative headline, then you have the leading doctor for the US come out and say this. You know what I mean? They're still trying to keep markets as optimistic as possible. And the central bank support is still very much there too, right? And for anybody who wants to join the Capital Hungry private channel, the promotion is still open. You can see how the private channel works by watching this introduction video and going on the website and everything there. Remember last night somebody said, oh man, Capital Hungry is so expensive, and then we saw what everybody else was charging and we found out Capital Hungry is the cheapest. Can't believe Q Banks does $25,000 for in-person, eh? Fucking crazy. But yeah, I'm gonna save this. It'll be able for anybody to rewatch, and those trade ideas are what I'm looking for more higher time frame intraday trade ideas with those price action, market structure, and fundamental confirms I laid out for you guys. Any questions, you can message me if needed, but you can always just rewatch this. I talked about exactly what I'm looking for fundamentally and technically, price points, market structure, everything I could dissect I shared with you. All right. So I'll see everybody later. Take care. Make sure you like, subscribe, share this around.